For those of you saying just because you're a business name, you cannot enjoy 100 million naira threshold, please watch this video.
If that's your side hustle, is giving you less than 100 million naira a year, when the company that's hired you to do the work is paying you, they will no longer deduct money from it.
Okay.
Can you imagine that? They were deducting now.
Yeah.
They would no
because that's what
deduct.
happens now. They deduct.
That's what happens now. So from January next year, if your income does not exceed 100 million, that's a small business. They will not deduct from you, right? But of course, you would agree with me, which is why I keep going back to this. If you earn more than 100 million naira a year, why should they not deduct? The majority of people who are against the reform don't even earn anything close to that amount. That's number one. Number two is, when they pay you that amount, let's say it's 500,000 naira, there's nobody that will just go and take it from your bank account. What the law says is, at the end of the year, your salary at Channels, you already pay PAY on a monthly basis. At the end of the year, the law will now say, do you have any other income other than your salary? You say, yeah, I do side hustle. And during the year, I made 10 million naira. So on that 10 million naira, you disclose it. Did you have to spend anything, transport? You have to look good to be able to do what you do. All of those things, you take them out. And then if there's any extra profit that is left, you go to the tax table and say, for this range of income, what tax should I pay? And then you pay it. So we call it self-assessment.
Okay. I've said it times and times again. You declare your income for personal tax. Now, we are in January. You have to file personal tax, obviously, for 2025 because you've been doing business, you've been earning an income. How do you then file? He has said it here, and I will repeat it. You go to the taxman, right? You know the way companies remove expenses and all of that. For personal income tax, you really don't have that privilege with the computation. You don't file financial statements, right? So in your head, you remove all your expenses and all of that and declare what you consider as your taxable income. That is what you take to the taxman. You don't go to the taxman with all the inflow in your bank account in a year. You go to the taxman with what you consider as your taxable income because you've removed all your expenses. The money you spend for your clothes, the money you send to your grandfather, your grandmother, whatever it is, right? Whatever you consider as your taxable income from all the money you've earned in a year, you go there and declare it. That is why it is called an assessment. Whatever you declare, the taxman can argue with you, can disagree with you, right? But at the end of the day, you have to declare first. You declare. If they agree with your assessment, they will grant it. If they don't, they will give you another number. They will give you a counter figure, and both of you will negotiate on it. That's exactly how you'll be filing your personal income tax come this January. My name is Mena. I've read the tax law, so you don't have to.